Welcome to RAIN, the Real Estate Investor Growth Network with your hostess, Jen Josie. Join like-minded real estate investors and accelerate your business towards greatness. You will hear step-by-step strategies for success, interviews with real estate rock stars, and we will dig deep into past projects where we bear it all, including the good, the bad, and some just plain ugly. So get excited. Here's the bestower of badassery herself, the real Jen Josie. Listener discretion is advised.
Hi, and welcome back. I'm Jen Josie, creator of RAIN, the Real Estate Investor Growth Network. Whoop, whoop. On today's episode, we have a guest that will be sharing their badassery. But before we begin, here's today's badassery bestowment, my little badass gift to you. Today's topic is boosting your brand visibility with creative swag. For real estate investors, leveraging promotional items or swag can be a powerful tool to enhance brand recognition and foster positive client relationships. Here are 5 tips on how to use swag effectively. Number 1, reflect your brand identity. Select swag that resonates with your brand's image and values. This could range from eco-friendly items for a sustainability-focused brand to high-end luxury items for premium real estate investments. Your swag should be a physical embodiment of what your brand stands for. Number 2, practical and useful items. Go beyond the typical pens and keychains. Choose items that are practical and likely to be used frequently by your clients, such as quality tote bags, stylish water bottles, or tech accessories like USB chargers. The more your swag is used, the more exposure your brand gets. Number 3, customization is key. Personalize items with your logo, contact information, and a catchy slogan that encapsulates your business's essence. Customization turns ordinary items into unique reminders of your services and professionalism. Number 4, foster client relationships. Thoughtful swag can be used to thank clients after closing a deal, welcome new tenants, or as giveaways at open houses and community events. It's a tangible way to show appreciation and keep your brand in their minds. Number 5, measure effectiveness. Track the return on investment of your swag by asking clients how they heard about you or what reminded them to get in touch. This feedback can guide future promotional efforts and swag choices. In summary, swag is not just about giving away free items. It's an investment in your brand's visibility and client relationships. By choosing items that are both reflective of your brand and genuinely useful to your clients, you create lasting impressions and foster goodwill. This can lead to increased referrals, repeat business, and a stronger presence in the competitive real estate market. So remember, the right swag can turn a one-time client into a lifelong advocate for your business. Now, on to today's episode of the Real Estate Investor Growth Network. We have with us Stephen Nagy. Stephen left his career as a personal financial advisor in 2007 to pursue his dream of being an entrepreneur and real estate investor. Many years later, he has never looked back, becoming a lifelong student of business and investing, implementing strategies learned, gaining valuable personal experience, and following his passion of working with and sharing with others. Stephen has spoken on hundreds of stages across the United States and worked with thousands of students, helping them realize and achieve their financial goals. Stephen not only talks the talk, but walks the walk every single day, growing his real estate and consulting businesses and practicing financial strategies like self-directing retirement dollars, the infinite banking concept, becoming the bank, and eliminating the 3 wealth killers from his life. Stephen is dedicated to helping his students and clients learn financial education, how to take back control of their money, and helping them achieve their dreams by solving their money problems. It's my honor to finally get him on the show, so welcome, Stephen.
Hey, Jen, thank you for that introduction. And I absolutely loved your opening, listener discretion advised, because you never know where these conversations go. My business partner, Chris Noggle, and I do a show every Wednesday morning at 9:30 a.m. Eastern called What the F Happened. And it's just a weekly review of the news and what's going on with different policy decisions and what's driving the markets and your money. And I got to tell you, that show, we go, I mean, it's no holds barred and viewer discretion advised. So I'm going to fit right in here well with you today, Jen, I think.
Very good. And I feel like our backgrounds, I mean, I know this is an audio podcast, but we even look good on the screen together. I like this. Well, Stephen, I have heard you speak on stage multiple times, and by the way, I don't even know I know we've had conversations, but I used to sell health insurance. So I'm still trying to put pieces together, and I have to hear you multiple times, and just to understand some of these concepts, mainly the becoming the bank, the infinite banking concept. So I'm excited to pick your brain one-on-one, not sitting at a bar this time. This way I got it recorded so I can listen to it multiple times. But I am thrilled to have you here. So give us a little background on how you got involved with real estate investing.
Yeah, absolutely. So it's a great question. So out of college, I wasn't exactly sure what I wanted to be growing up, but I decided to get into the financial services world and got fully licensed with my Series 7 and 66 and 215 variable annuity insurance. And, the full 9 yards. I started working with Ameriprise Financial. This was back in 2006. And to learn a lot about the financial world and kind of how traditional investing looks and how most people look at retirement and look at savings and look at investing. And unfortunately, it doesn't work. Let's face it. In this country, there's so many people that work their asses off their entire lives. They get to retirement, and for whatever reason, a lot of times not even their own fault, they are not able to retire.
Right.
The market's crashed or inflation's just gone through the roof, or unexpected expenses and different things happen in life, or just life happens. So, I learned that the traditional ways of, investing into a 401k and climbing the corporate ladder and, saving and the stuff that Dave Ramsey teaches with, buying term and investing the difference, all those different things you hear your entire life, at the end of the day, unfortunately, just don't create true success and really happiness. I mean, if you're working into your late 60s and 70s, are you really happy? A job that you don't want. Now, there's a difference there. But so as a financial advisor, I really saw that firsthand, meeting with people and getting that. And one day I was invited to a real estate investment seminar, and I decided to go check it out. And the guy at the front of the room was talking about entrepreneurship and investing in real estate and what it can do for you and your family and how you can, have control over how much money you make. And I was like, that's what I want. Like, that's what I want to do when I grow up. And so I slowly started to get involved in some deals. I actually purchased a class and I went and got educated and I got myself a mentor. My cousin and I, we started doing some real estate deals, and we started slow. We made some mistakes along the way. But it got to a point where eventually I was able to transition and give up all my financial services licenses and left the financial services world and got into real estate investing full time. And then I met a guy named Robert Kiyosaki. And a lot of you guys know him from Rich Dad, Poor Dad and Cash Flow Quadrant. And I absolutely love Robert Kiyosaki and everything he does. And he was a big, one of my mentors when I was just getting involved in the business. And I actually had an opportunity when he was launching Rich Dad Education to go out and start sharing what I was doing in real estate investing in my business and what I had learned over the previous year or two. And as a young person, I wasn't married, didn't have kids at the time, things like that. So I had a chance to go out and start traveling all around the country, teaching this stuff that I was actively doing. And I just thought it was so cool, because one of the things that drew me to being a financial advisor in the first place was helping other people. It's always been like a part of my heart, being able to, and I won't get into my childhood and background right now on this show, but I came from a very rough, broken childhood and family and stuff like that. And so I got to see, different sides of the world and And I just, for some reason, I just always like had a heart to always want to help other people. And so it drew me to financial advising, and it drew me over into the consulting world, which over the years, I've started various businesses. I've always been involved in real estate investing. But at the end of the day, it's always led me back to the consulting side, the coaching side, the training side. And, that's what I do full time now is I've over the years learned what I enjoy doing. When it comes to real estate investing, we could spend 8 hours just talking about different opportunities in real estate right now, Jen. Like, that's the cool thing about real estate, though, is there's so many different ways to invest in real estate and make money in real estate, whether it's active, it's passive, it's wholesaling, it's flipping, it's rentals, it's multifamily, it's all these different ways of doing. And so I've gravitated over the years what I liked. I learned that I don't love flipping houses. I don't love design. I don't love that aspect. I don't love the marketing side of the business. What I love is the money side of the business. And that's what we're going to ultimately focus on today, at least, is kind of the money side of real estate investing. Whether you're starting right now and listening with nothing, and you're looking, hey, I know I got to get out of my job. I know I got to do something else to get out of this day-to-day rat race that I'm in. And you're looking, we have the money. We'll talk about that today. Or if you're at the point where you're like, I'm kind of over flips, I'm kind of over rentals. Like, what else can I do in real estate? More passive, though. So I don't have to spend my time to earn money. Let me have my money go make money. And so that's what I want to focus on today, is the money side of real estate investing and how we can be smart with the money that we're making, or generate that wealth and be smart with it to be able to lead us to our goals. So I know that was a lot right there, but
it was a lot. And this is why I said I have to hear you multiple times, and I'm glad I'm recording you on this so I can go back and re-listen. But my opening badassery bestowment was about swag, and you're wearing a hat right now that says BYOB, and I'm assuming that doesn't mean bring your own beer, which of course I'm very fond of that phrase right there. So I actually have it on a gate in my backyard. It says proudly serving whatever you bring. So I know it doesn't stand for bring your own beer. So what does BYOB? Tell us about it. Let's dive in.
Absolutely. So BYOB is be your own banker, become your own bank. And what that means is really controlling our wealth and ultimately becoming the bank. And if you think about what banks do, so I've studied banks in depth now, like to be able to understand how banks operate, the way banks work and function. And we're not going to get into the details of fractional reserve banking and what the Federal Reserve does and central bank.
Because I'll fall asleep.
Yeah, so we're not going to get into that right now. Check out the book, The Creature from Jekyll Island. Highly recommend if you really want to dive into the Federal Reserve System and central banks. But what I do want to talk about is how actual banks operate. So when you look at what banks do, we all know banks make a lot of money. If you go drive down any rural road in the country, if you go to any major city in the country, there's branch offices everywhere. Some of the most beautiful buildings, skyscrapers in the major cities in this country. If you look at the top of them, most of them have a bank name at the top of there. Right. Banks understand. And one of the reasons, there's a couple of reasons. First off, banks know how to make money. And so when you look at what banks do, banks make money a couple different ways. So primarily banks make money by making what's called a spread. So a lot of people probably know this, but it opens your eyes when you think about it. So when you go to the bank right now today, let's say you go to the bank and you say, hi, I'd like to, deposit $1,000. Well, they don't take that $1,000 from you and go stick it in a little box with your name on it and wait for you to come back and get it, right? They don't do that. That's not how they work. They take that money, and what do they do with that money? They take that money, they immediately start lending it out to other people. So now they're giving you, maybe paying you, a couple of years ago, 0.01% in a savings account. You might see some of these high yield savings nowadays around 4 to 5%. So they're paying you that 4 or 5% in a savings account today, or maybe 1%, whatever. And then they're taking that money, they're lending it out. So on a mortgage, for example, they're lending it out about 8%. I know rates just dropped, let's say 7%. So they're making that 3 to 6% spread. They lend it on a car note at 10%. Now they're making that 6% spread. They take that money, they lend it on a home remodel loan or a debt consolidation loan. So they're making that spread on the money. So banks are taking your money, immediately putting that money in motion to generate more money for them. Now, that's one way that banks make money. Now, banks, when they do create wealth, A lot of people don't know this. So banks put over 95% of their M1 money supply. So all the money that banks generate, they put their money in two different asset classes. Do you know what those are, Jen?
I do. I already know these answers.
Okay. So, so if anybody's listening, banks put their money in two different asset classes. Number one, banks put their money in whole life insurance. Believe it or not, whole life insurance. And we're going to talk about that in just a second as well. Very, very important. Why do banks put their money in whole life insurance? Because it's a safe, protected, tax-free, guaranteed growth place to be able to store wealth when you do it the right way. And that's why when you walk into a bank, almost everybody's like a vice president and is out of all these fancy titles, because that now allows the bank to have an insurable interest and purchase that policy on that individual. But more importantly, banks put the large majority of their money into another asset class, and that's real estate.
Real estate.
And that's why you see so many branch offs. When I first learned about real estate investing, I'll never forget this. The guy at the front of the room was talking about real estate, and he used McDonald's as an example. He goes, do you understand how McDonald's makes money? McDonald's doesn't make money by flipping burgers. McDonald's makes money by buying real estate. A lot of people don't realize every McDonald's you see, they own the land that McDonald's is on. And not only that, McDonald's was smart back in the day. They went into areas and they said, okay, this is going to be a successful intersection we're going to build a McDonald's on. But what they did is they didn't just buy that corner. They bought the whole intersection, the land around the whole intersection. And now what are they doing? They have their McDonald's there, but they're leasing the land to Wendy's. They're leasing the land to Wendy's. They don't care. They don't look at that as competition. They look at that as wealth because they own the real estate. So at the end of the day, banks are doing, and McDonald's is a great example. Every successful multi-millionaire you'll ever meet in life, guess what? The majority of their portfolios, whether it's for tax strategies, whether it's for wealth growth, is real estate. And so if banks are doing this is how banks are making money, then instead of recreating the wheel, why don't we just mimic and duplicate what the wealthy do, what corporations do, what the banks are doing? And that's exactly what BYOB in its essence is all about. Just mimicking and doing what the banks do, becoming your own bank and controlling your wealth. Now, the last thing I want to say on that is when it comes to what we teach with becoming your own bank, the other part I was talking about was that spread. So that's how the banks are making that money. Well, that 8% on a home mortgage loan, that 10% on a car note, that 12% on a debt consolidation loan, whatever it is that you're borrowing money for, all that interest is going to somebody else. And when we look at truly successful people, they look at eliminating, and you said this in my intro, the three wealth killers.
Yes.
And if you can eliminate these three wealth killers from your life, it's going to push you up trajectory to make your goals happen, make you successful that much quicker. And those, just real quick, are taxes, inflation, and volatility. And so those have been my three wealth killers for years and years and years. And so when we look at the velocity of money and how money bleeds out with these three wealth killers, well, we have to add a fourth onto there now, which is interest. And that's what we can kind of dive a little bit more into. Because when you look at how much interest gets bled out of your life to other people, to other banks and financial institutions, it's like, what am I doing? What if I could be the bank, and instead of giving all that interest to other banks and financial institutions, making them rich, what if I could keep that within my bank, pay myself that interest, and make me and my family wealthy? Why not?
Listeners, do you see what I'm saying? I mean, this guy, I love how you talk, because you want to, I know you're such a great educator and you want to get all this information out there. And so I'm okay with the listeners pausing and rewinding and going through it again, because that was amazing, Stephen. Thank you for that.
That's the downside of doing this for so long. Is I do have so much in my head. I got to try and get it out, but I need to slow down. So yeah, we'll lay out the broad vision and we'll back it up and we'll dive into it, Jen.
I love it. So one way, a very tiny way someone can be a bank is by being a private money lender. Mm-hmm. Correct. But we are not talking about that type. This is something totally different. Or is it in that same, system?
Absolutely. So it's all combined. It all goes together. So being your own bank can mean multiple things. And at the end of the day, it's being as smart as you can with the money that you have. And so, talking about private money lending, it's a huge it's a huge part of my investment strategy. It's a huge part of what we teach and train on. My business partner, Chris Noggle, and I, we founded a company called Private Money Club, which is a platform of like-minded individuals that get together and people that have money that are looking for opportunities and real estate deals where they can lend their money just like a bank does. And the other half of the people in the community are people that are looking for money that have deals available. So, anybody on here right now, and, I trained real estate investing for years and years and years, traveling around the country. And it's very easy to teach somebody to walk through a house and say, okay, we need to put a kitchen in here. This is what it costs. It needs a roof. That's what that costs. It needs windows. This is what it costs. You put it in a spreadsheet. If you have the right tools, it pops it out. Okay, this is my maximum allowable offer on this property. This is, how much profit it's going to, that's all done through spreadsheets and through simple math. I can teach anybody that in 2 seconds. Building a power team, how to put together the right people around you, your contractors, your realtors, your appraisers, all that stuff. We can teach you how to do that very easy. But ultimately what people end up running into is, okay, well, how do I get the money? Maybe you're brand new and you don't have, the right parameters that the bank wants to lend on. A bank wants you to have a certain credit score. They want you to have a certain down payment amount. They want you to have a certain income compared to your debt and all this stuff to give you these loans. Well, what if you don't fit into that little perfect box that the bank wants you to fit into? And then we look at, hard money lending. Okay, hard money can be an option. And hard money are basically, financial institutions, family offices, people that, might have money that are going to lend a little looser than banks, but they even typically have their little box they want you to fit in or have, hey, we'll lend this amount only, this loan to value and things like that. So it's still fitting. So private money becomes one of the most valuable resources that a real estate investor can have, whether you're brand new or whether you're very experienced. Because when it comes to private money, it's truly private money, meaning the terms of that deal, whether somebody lends on it, what the interest is, the length of the terms, how it's paid back, all of that is negotiable every single time on every single deal. And that's the beautiful thing about it is a lot of our private lenders in the Private Money Club are teachers, are just everyday, employees that are just looking to do something different to make their money grow for them. Of course, we have a lot of wealthy individuals and they're also looking for deals and opportunities. But what it allows, like Jen, if you're an active real estate investor and you're doing deals, maybe you have gone to the bank and done a couple. And anybody that's done real estate, you've run into this. You know exactly what I'm talking about. But maybe you have done a couple deals. Well, how do you make more money flipping houses? You flip more houses. Right. Well, you're going to run into a point where the bank's not going to lend you any more money, even if you have the best credit in the world and have income. They won't lend you anymore because you have too much out already with all the other properties going. So the only way to do it is to pivot into that way. So, me as a private money lender on the passive side, I look at Jen and Jen's like, okay, hey, I got this deal. It's worth $250,000. I need $150 to buy it. I need $50 to do the rehab. So I'm going to look at Jen and say, okay, I like that deal. I like you. I'm willing to lend you the money. Now, what does that look like? So at that point, we're going to do it just like a bank does. Right. So this is being the bank, literally. I'm going to lend my money to Jen. Not to Jen, but her company. We only lend to companies, very important as private money lenders because of the Dodd-Frank rules and everything that went into effect last decade. But nonetheless, so we're going to lend our money and we're going to do so using a mortgage and a promissory note, the exact same documents that a bank would use. And if Jen doesn't pay me back, there's going to be defined in there what happens. I take the property, have to foreclose, whatever the cases are, we can, negotiate it, but that's all part of it. So just like a bank, if my money doesn't get paid back to me, like you don't pay a bank, I have all the same recourse that a bank would have to go take that property over. So we're literally just duplicating and doing exactly what banks do. And so on the private, on the real estate lending side of this, that's exactly what being your own bank is.
Okay. So as I have said, I've heard you speak and you talk about infinite banking. And is that the same as being your own bank? Is this something totally different? Am I jumping topics here?
Yeah. So the infinite banking concept. is a
and where does
strategy.
whole life insurance come in? Because this is where I'm like, it's just too, I can't put the pieces together properly. So dumb this down for me a little bit.
Yeah, absolutely. So private money lending is more mimicking and acting
Yes.
like a bank, doing what banks do to generate income. The infinite banking concept is a strategy of creating a banking system. And the purpose of this is allowing us to take our money that we're making and put that money into our own banking system, as opposed to into somebody else's bank. Again, where they take your money and make the spreads and loan it out for interest and things like that. Because think about it. I mean, if I take my money and I go deposit it at Wells Fargo today, and then the next day I want to go purchase a car, well, great. They're paying me 4%, but they're going to charge me 9% for a car note. So again, they're making money off of my money. So instead of that, what if we could take our money, instead of putting it at somewhere like Wells Fargo, what if we could put it into our own banking system? And then when we need to make a purchase or we need to do something, we can go to our own banking system, pull that money out and use that money for whatever we want to do. And then we create a repayment plan, just like the bank would create for us on a car note, for example. We create a car note for ourselves. But now instead of me writing monthly payments to Wells Fargo or BMW or Toyota Financial or whatever, I'm writing those monthly checks back to my banking system. So that way, all of that interest that would have been bled out to somebody else's bank is now staying within my family bank for the rest of my life. And so we've studied this extensively for many, many, many years. And the infinite banking concept has been used for 30, 40 years. And before it became IBC, it's been used for over 200 years. So just to be clear, this is not a new strategy. This isn't something that Stephen Nagy created or my business partners. This is something that we have just learned and implemented and teaching in a way that nobody else in the country does. And so to create this banking system, a place to put our money, to be able to do all this with, what we use is a whole life insurance policy. Okay. So just to clarify.
And let me pause you here for a second. This is because like many of the listeners are going, well, I don't have money to make my own bank. So where am I going to get that money from? And this is where the whole life policy comes into place, correct?
Yeah, it can. So yeah, we can get into that for sure. So a couple things to clarify. So whole life insurance. First off, you hear whole life insurance, you're like, oh yeah, well, I've heard all about whole life, and all this. No. It's completely different than anything you've ever seen before, because what we do is we take a whole life insurance policy and we slice it and we dice it and we rip it apart and then we redesign it backwards. And I know that sounds weird and we could talk more about this, but that's literally what we do. And the reason though we use a whole, and I'm not talking about an IUL, an index universal or variable universal life or anything like that. We use a whole life insurance policy. And
on
there's a number of reasons. Right. Yes, on your own body or on a spouse or on a child or something like that, but typically on yourself. Yes. And so the reason we do that though is because whole life insurance, it provides a number of benefits that no other vehicle in the entire world provides. Okay. And so just to name a few of those, every dollar that I put into my banking system, my whole life insurance policies, every dollar I put in there now compounds uninterrupted, guaranteed, tax-free for the rest of my life. Okay. So every dollar I put in there starts taking advantage of what's uninterrupted compounding interest. And if you don't understand compounding interest, it's a fascinating idea. And if you just the most simple example I can give you is everyone's probably heard this, where you take a penny.
Yes.
Would you rather have $1 million today, or would you rather have a penny today that doubles every day for the next month? Well, you better take the penny today that doubles every day for the next month, because in 31 days, you're going to have over like $6 million or something. And so what we want to do is, and you want to short sight yourself if you took the million today. And that's compounding interest. Actually, Albert Einstein is credited with saying compounding interest is the eighth wonder of the world. Those who understand it use it. Those who don't pay it. And so what we're doing, and there's no other vehicles in the country that take advantage of uninterrupted compounding interest, except for whole life insurance. So what we do is we design these policies where you can put money into one of these whole life policies, and then you can immediately not only get all of that compounding interest guaranteed tax-free for the rest of your life, but you can immediately now take that money out of the policy to then simultaneously use it. And that's where the power of infinite banking comes in and becoming your own banking system. Because now what I can do, and this does all start with paying yourself first. And we'll talk about that. But so we put our money into our banking system, this whole life policy, and then immediately I can pull out up to 90% of what I put in there to use. So now let's say I want to go buy a car instead of, $400 a month going to the car company. Now I'm just paying myself back, and all that interest and everything is staying within my financial life. And so whole life insurance allows us to do all of this. Now, the way that it works, just real quickly, you're like, oh, that sounds, the way it works is when you put the money into this whole life insurance policy, when you take the money out to use it, you're actually not taking your money out. You're actually using your money as collateral. I mean, you're using your policy as collateral, and the insurance company is giving you a loan against that policy. Because think about it. What is a whole life insurance policy really? Well, it's a death benefit. Okay. So when you pass away, you're going to receive a death benefit. You won't. Your beneficiaries are going to receive a death benefit tax-free. So that the insurance company knows that they're going to have to pay that money out to you one way or another someday anyways. So they say, hey, if you want to use that money today, go for it. So you could take a loan against that policy. There's no terms. How, when, or even if. We always recommend you pay it back. That's part of the system. But how, when, and even if you ever pay that money back to the insurance company, completely up to you. So you're the banker. You're literally in full control of how all of these terms and everything works within here. So now we have this uninterrupted compounding growth within our policy, and simultaneously we're using that money to pay down debt quicker than otherwise possible, because we're using the snowball method, and now we're paying stuff off and we're repaying ourselves all that interest that was going to credit card companies. Now it's coming back to us. So it allows us to snowball that even quicker. Or for car purchases, where we recapture every single dollar for every car you'll ever buy, driving on, you'll get every dollar back for every car you buy in the future. Or just building wealth, a warehouse of wealth, where you have that uninterrupted compounding growth, and simultaneously you're buying more real estate, you're putting money and growing a business, you're doing private money lending, you're growing wealth now, two ways at the same time. And if you want to learn those three strategies in depth, how this works, you guys go watch the 90-minute video. It'll be on the link on this podcast. Click the link, watch the 90-minute video. And I go into detail with pictures and PowerPoints on exactly what this looks like and how this works. But this is what infinite banking and becoming your own bank really does for you, though.
Okay, two quick questions. Are you limited on how many deposits you can make into your life insurance policy?
Yeah, great question. So when it comes to depositing money into these, and I love you said deposit, because, when you pay into a whole life policy, it's really the premium
Correct.
That's going into these things. But if we want to change our mindset and think like the wealthy do, think like the banks do, well, we're going to be depositing money into this policy, because now it's our new banking system. So I love you said deposit there. And that's what a lot of people are like, well, I don't have millions of dollars. This has been used by the Rockefellers and all these wealthy families through history. And well, I can't do that. I don't have that. I'm just starting fresh. Well, that's the beautiful thing, is we can get you started with your own banking system by putting as little as 10 times your age on a monthly basis. So this podcast is coming on my birthday, by the way, January 15th,
right.
I believe. So I'll be 41 years old, 41 years old. So I'm still young. I feel like I'm getting old, but it's all relative. So at 41, if I was just starting with my first banking policy, I would want to put at least $410 a month into it. So that's like the guideline minimum of where you'd want to start. So if you're 25, $250 a month. If you're 50, $500 a month, so that's where you want to start. So that amount or more into one of these is where you want to start at. So you got to look at yourself, that's about 10% for most people, about 10% of it. You should be saving about 10% anyways. So you put that 10% away or whatever it might be. And now, but here's the cool thing, you're not just sticking away like in a retirement account. You just open an IRA at 40 years old. I can't touch that money for 19 years without getting penalized for pulling it out. With this, I can put it immediately within 30 days, pull almost all of it right back out to use it for other stuff. But it allows us to start generating wealth so we can start very small. And here's the cool thing. If let's say you're new to real estate, but you've done a couple wholesale deals, or you just did a flip, and maybe you got like $30,000, $40,000 sitting there. And you're like, all right, I got this money. I'm ready to go do another deal or whatever. But you got 30, 40, 50, 60, 100 grand sitting there, but you're still new. So you're like, I don't know what my annual income. So here's what I do. I'm going to commit to my minimum. I'm going to do $5,000 a year in one of these policies, but I got $50,000 from this deal I just did. Here's what we can do. We can create it where you only have to put $5,000 or less into this thing a year moving forward, but we can get that $50,000 into it up front. and really jumpstart it. So now you got 50 grand in there for the rest of your life. That's compounding, guaranteed, uninterrupted, tax-free. And immediately you can pull back out 45,000 or more of it to be able to use for the next deal anyways. So now we're really starting to generate well. So we can do these dump ins up front that really help a lot of people too.
Okay, so that answered most of that question. My second part of that question was, is there a fee to take out that, say, 90% of what you've already contributed towards your life insurance policy?
Yeah, great question. So there's no fee per se, but what the insurance company does is they charge simple annual interest on any outstanding loans that you take from the policy. And so what happens is you have there's two ways to kind of look at this. So you have your money in the policy compounding at a rate slightly less or slightly greater than what the loan rate is. So right now, as I sit here, December 15th, 2023, the loan rate out of most policies is right around 5%. Okay, annual simple interest. My money's in the policy compounding through the company's dividends right now around 5.5%. Okay, so we're making that slight little spread. But here's what happens is when we're using that money, now we're using that money either to recapture interest and paying ourselves back with interest, or for investing where we're growing our wealth. So now we're either making the spread while that money's compounding, or we're allowing it to cover. But here's the really cool thing is that's in the first year. But what we start looking at is we start looking at that when you borrow the money out, that's annual simple interest. The money in the policy, remember, is uninterrupted compounding interest. And when you look at the difference of simple versus compounding interest, over the years, that growth within the policy is 20, 30, you get to the 7th, 8th year of this thing, 90, 110, 150%. And remember, you're only paying that 5% simple interest to use that money. So it really starts to pull away. I show a really cool example, Jen, and you've seen this in the presentation where I ask everybody, how many of you think that you can make money earning 4% while paying 6%? And most people are like, no way. How are you going to make money paying 6 and earning 4? Well, I show you in the presentation exactly how that happens when you look at compounding for simple interest.
You know, I just looked over because I have so many more questions, and I'm like, oh my gosh, we're already 36 minutes into this podcast because I thought maybe we've just been talking for 10 minutes. So I could keep going with all these questions. Does it matter how much life insurance policy, like, does it matter if you take out $1 million policy worth or a $5 million policy? Does that matter?
So here's the cool thing. Remember I said before, we kind of build these, we rip them up and tear them apart and we kind of build them backwards. That's exactly what we do. So we don't start with, hey, I want $1 million in death benefit or $5 million. We say to you, how much do you want to fund this policy? How much do you want to put into it with premium deposits? What do you want to do? Like, what does that look like? And we'll strategize. We'll talk about it. What's right for you on a strategy call and things like that. But we're gonna figure that out with you. And then what we're gonna do is we're gonna build the policy around how much you're putting into it. And then it spits out. The death benefit is what it is.
Got it. And the payments, the monthly payments should be about 10 times your current age.
Yeah, it's like a guideline minimum, 10 times your age on a monthly basis, or another way is like 10% of your gross annual income. Those are kind of good starting points of where you'd want to start with a policy. So that amount or more. And by the way, you can pay into it monthly, quarterly, biannual, or just once a year upfront, so whatever fits your financial situation. So for me, most of my policies, all 4 of my policies starting at 5th right now, are all paid annually. So once a year, I put the money into the policy, and then I don't have any monthly deposits or payments. So you can do, and that can change over time, and there's some flexibility there.
All right. So before we move to the second part of the podcast here, because I'm so disappointed we've already just spoken for almost 40 minutes. I'm like, what is the best way for a listener to get started in this infinite banking and being your own bank? What's the quickest and best, easiest way for them to start?
Yeah, absolutely. So the first thing you want to do is watch what we call the 90-minute video. And you can go to nagyleadership.com. It'll be on there, nagyleadership.com. Right at the top of there, it says, watch, the 90-minute video, new to IBC, watch this first. Watch that 90-minute video, and then just schedule a call. Schedule a call with myself, or I have about 10 what I call my money mentors, that this is all they do all day, every day, is get on calls with our clients. They do strategies. They talk with you. They work through what your goals are, what your problem is, if you have a money problem, and how do we solve that with you using the infinite banking concept. And we have really cool, if you have debt, we create debt maps for you and show you exactly, hey, without infinite banking, it'll take you 9 years to pay this debt off. Implementing this into your life without changing anything except where your money goes first. Now we can pay that off in 3 years. And we'll literally map this all out with you before you even get started with any of it. So you'll know your exact plan before you have any commitment to getting started with any of this. And by the way, we do all of this for free. You'll never pay me, you'll never pay our company $1 to do any of that stuff that I'm talking about with you. It's all just part of it.
And how do you make money doing this?
So we do make money directly from the insurance companies, just like any other insurance agent would. Now, because we build these policies backwards and built for banking and cash value and not death benefit, we make about 70 to 90% less commission than what a typical life insurance agent would make, which is hint, why most life insurance agents don't talk about this. Because if Jen, you're a life insurance agent, I'm like, hey, I can teach you the strategy for your clients. It's really going to help them, but you're going to make 90% less income. Are you excited? You're going to be like, no, dude, I'm happy with what I'm doing. I'm good. But that's what we do. This is all we do all day, every day. And that's how we get paid. So we don't charge anything. We get paid directly from the insurance company. It's a win-win situation for everybody, which, by the way, if you're in real estate, if you can do that one thing, just learn how to create win-win situations on every deal you go on, every person you talk to. If you can create win-win situations, you'll be a very, very successful real estate investor, business owner, or anything. I built my entire business off of win-win situations.
So, Stephen, and I'm yes, I have my license, or actually I let it expire because I was getting calls all the time. Oh, you have your life insurance license. Do you want to come work for us? I'm like, no, go away. But a lot of people don't realize that you're not paying them to do everything. They get paid by the companies that provide the policy. So I'm glad you brought that up. And because a lot of people are scared to speak to experts on this. Right. And before, again, I could talk to you for hours. Are there any, because a whole life policy, I know just from having the experience of having written policies for people, there's if you've had cancer, you have to wait till you're cancer-free 5 years before you get a policy. Are there those type of stipulations as well? What would stop someone from not being able to get this whole life policy?
Yeah, absolutely. It is full medical underwriting. So if there's any kind of, health challenges, anything like that, that's part of the approval process. There's some things we know will be an automatic decline, like certain AC1 diabetes levels, things like that. For the most part, though, if somebody's kind of I'm not sure whether or not, doesn't hurt to try. We'll put you through underwriting and see what happens. But even if you can't get life insurance, we do have options for that. So, for example, you can use your spouse, you can use adult children or even juvenile children. You can use a business partner. So you can have an insurable interest on another individual where you own the policy, you control it, you put the money in, you use it for banking. It's just on somebody else's life, even to the point where we have people that for whatever reason, maybe they don't want a policy anymore, or we find a policy that somebody is looking to get rid of, and we'll actually connect them with somebody that can't get insurance, and they'll actually buy somebody else's policy just to use it for banking. So oftentimes we still have solutions. So I'd still highly encourage you to chat with us and see what we can figure out.
I love that. And I used to tell people, definitely go get your life insurance before you go to the doctor in case you get some bad news. Because as soon as that news comes out, you're screwed. Yeah. Anyway. That was awful that I just said that. Stephen, this is awesome. And again, I appreciate you being here so much because it's starting to click, and I appreciate the one-on-one time with you. And this has been amazing. So we're going to jump to the second part of the podcast here, and what makes Stephen Nagy a badass, which we all know you are. And I use the acronym BADASS, and the first letter is B for book. What's a book that's made a huge difference in your life?
Yeah. I mean, I mentioned it earlier, if I'm looking back, I would say Rich Dad, Poor Dad with Robert Kiyosaki. There's been a lot of books. One of the books I read before I became a financial advisor, when somebody was kind of still talking to me like, hey, this might be something. I'm just looking at my bookshelf and it just made me think of this. But a book called Liar's Poker by a guy named Michael Lewis. Michael Lewis is one of my favorite authors. He's Maybe not as much some of his recent books, but unbelievable. So check out Liar's Poker. I think it's a fun book. But yeah, anything by Robert Kiyosaki, I'm a huge fan of, and really any kind of any positivity books. I mean, mindset is everything. If you believe you can do it or can't, you're right, and stuff like that is so important. So, and mindset, it's one of those things it's every day, because there's so much negativity out there. There's so many, we're surrounded in a world of negativity. I mean, there's no other easier way to say it, between TV and the news and just everything that goes on with politics and just life and everything. And so just having that positive mindset will literally change your entire life. So just any kind of books like that, I'm just a huge proponent of.
I love all that. And I want to give a shout out to a book you introduced me to, which is Mapping Out the Millionaire Mystery. And it was written by Chris Nagy, who's your business partner, correct? Did I say his name
My two
right?
business partners, Chris Nagy and Brent Kessler, wrote that book a few years ago. It's based off of a book by a guy named R. Nelson Nash. So Nelson Nash was kind of like the godfather of creating the modern day infinite banking concept. And so he wrote that book back in the 80s. And then Chris and Brent kind of wrote this kind of updated version, Mapping Out the Millionaire Mystery, over the last few years. And by the way, Jen, if you go to nagyleadership.com, at the top of the page, it's going to say get our 3 most valuable ebooks for free. So that's one of the books that I wanted to give everybody for listening right now. So if you go over to nagyleadership.com, you can click the top right there. It'll just put your name, email, and it'll spit out the 3 ebooks. So you'll get a copy of Mapping Out the Millionaire Mystery, which is it's mind blowing. Definitely do that. You go read that one first. Also, real estate investors on here, you're also going to copy of Chris's book, The Private Money Guide, Real Estate Edition, all about private money lending, like very, very basic information, but important. I mean, private money lending is basic, and you get the foundation. So the book really sets you up with how to be successful with private money lending. And then we threw in another book called it has to do with infinite banking concept and buying cars. So how to get back all the money for all the cars you purchased. So 3 books you guys can all have.
And I was just going to tell people to go to Amazon and check it out. But thank you. And you're giving us presents on your birthday, January 15th. So thank you very much for that. All right, back to this acronym. The first A in Badass is for advice. What's the best piece of advice you've ever received?
Yeah, that's a great question. So
you've given us a lot of great advice. So what's some good advice you've received?
Yeah. So before I became a financial advisor, I remember I was working at a car dealership. I just moved to South Florida, away from home. I grew up in Southwest Virginia, up near Virginia Tech in the Blacksburg area in Christiansburg, if anybody's familiar. But I just moved down to Southwest Florida in Fort Myers, Cape Coral. And I was working at a car dealership, like I said, trying to figure out what I wanted to be when I grew up. And I had a sales manager there that was, I think he was 80 years old, and he's been there forever. And he was one of those, you guys probably met somebody like this. You don't see him as much anymore, but just very hard-nosed, like old school, like doesn't put up with BS. And, I feel like those people don't exist anymore. Everybody's all nice nowadays, but it's one of those guys that'll tell you the way it is. And I remember, I was very young at the time. And so I'd come into work hungover and, oh, wait a minute, we still do that nowadays, but no. But no, so you know my point though. So this guy though, he told me, he goes, Stephen, he goes, one day, he goes, because I was talking about money. I was like, we don't make enough for all these hours we work. And all the complaints young people always have. And he goes, Stephen, he goes, let me just give you this advice. He goes, Stephen, if you accept $1 from somebody else, a company, a corporation, a person, you accept a 50 cents, you accept any amount of money to do a job, you do that job 100%, you give it your all, no matter what. He goes, the money's irrelevant. Like, you never want to say, I'm going to work to the amount of money that I'm making. You want to do the work and work to what your level that you feel is the best you can do. And if you do that, the money will follow. And it's always stuck with me because you always hear people complaining and things like that. And, I'll get caught up doing it in my own life, over the years. And I always think back to that, like, why am I really doing this? And if I can do this for me, because I want to do it and because I know it's the right thing, because I know it's going to help other people, I know it's going to create win-win situations, I know the money will follow. And that's exactly what I do to this day. I mean, my business partner, Chris Nagy, and I, we say this all the time. We give away our best stuff for free. Every single day. We give our best stuff away for free. And we know if we do that, the money will come. And it proves me right over and over and over again.
Excellent advice for that old timer. I love it. Very, very good. Thank you for sharing that. All right. The D in badass is for drive. What drives you to be successful?
Just life, I think, living life. My dad told me when I was a kid, life's no dress rehearsal. You get one chance at it. So you got to get out there. You got to live life, enjoy it, wake up. Who wants to wake up and dread the day, like driving to work and fighting traffic and dealing with your boss. And, if you like that, fine. But, to me, it's like, I want to wake up every day and be excited for what's going on. Like whether it's a day grinding out on phones and getting the work done, or it's waking up on a vacation somewhere or whatever. I want every day to be enjoyable. And so that's what I've tried to done is create all my businesses around having a life that I enjoy, waking up every day to live. And, I've been very blessed and fortunate to have a beautiful wife. We've been married almost 10 years now, and we have an 8-year-old son, and, have wonderful friends and family and things like that. And at the end of the day, that's what drives me, is to, be able to provide more for them, throughout life and down the road and things like that. So,
well, it is very evident in all that you do. So thank you for that.
I feel like it's kind of a cliche answer there, but
it's not.
I hope I actually live it, because that's how I literally do.
It is very evident in everything. And I could, just by how fast you talk and you want to get this information out, because you are so giving. And I love that. All right. The second A in badass is for aspiration. I'm a big goal setter. So what is a goal you are currently working on?
Yeah, so right now we're building the company Private Money Club, and one of my big focuses is creating that into a multi-$100 million company that we can exit in 5 to 7 years. And so creating the community, the platform, the software, the technology, everything around that is a big goal that we have. I've bought and sold companies before, but never at that extent and that level. And what we're doing with that, so that's a big goal. And on the BYOB, the infinite banking side, we're already right at the largest and strongest company in the country for that. But we're looking to really double business on that. And so my goals right now are solely focused on the businesses right now in the business life.
And to do kind of a sidebar here, you have events all the time too, because I know you had one here in Raleigh where I live. You live down in Jupiter, where my mother and sister live, by the way. Wave hello to them, off Donald Ross. But you had an event in Raleigh, and you have events throughout the year. So the best way is to go to nagyleadership.com to see when your next events are throughout all across the country and everything.
Yeah, absolutely. We'll have them listed on there. And we do events called Money Tank a couple times a year. We have what we call the Experience Mastermind. We do virtual events quarterly, and we do pop-up events here and there randomly as well. So we'd love to, meet you in person. To me, that's why we still do live events. We're very, very successful purely online through Zooms, trainings, and YouTube and everything we do. But there's just nothing like being in a room with somebody and meeting them, and Jen going out to the bars afterwards and having fun. And to me, that's what it's all about. So it's why we continue to do events. And we call our mastermind the experience, because it's not sitting in a ballroom and listening. It's going out in the world and doing things. We've raced cars, we've flown helicopters, we've done zip lines and skiing, and we do all these fun adventures and activities with our members and with our clients, and they all become friends. And so it's but yeah, love live events.
I do too. And there's nothing wrong with hearing you multiple times, because you have so much information to share. Just put out there.
And I attend other people's events quite often. I mean,
yeah.
We attend other people's. I attend multiple masterminds. We spend in the high 6 figures annually just on other events and masterminds that we attend, just to build relationships. So big part, man. I mean, the old cliche, or whatever you want to call it, your network is your net worth, equals your net worth. Mm-hmm. It's so true. I mean,
yep.
any time I've ever had challenges in business or run into roadblocks or even failed, I've always had somebody from my past I've been able to reach out to help me overcome it or get me back on my feet or take my business to the next level. And so we continue to do that to this day, 100%.
And you have taught us so much on this podcast. And yet in your intro, I said that you are a lifelong student. And I agree. And that's absolutely, and paying for proximity. I like to say that as well, because, it's the people in the room as well who are going to be there for you, just as you said. All right, moving on here, because I know your time is valuable. So like I said, I could talk to you for hours.
Yes.
The first S in badass is for systems. What systems do you have in place to help you achieve success?
Yeah, so systems are so important.
Oh,
So you can spend a lot of time doing a lot of stuff repetitively or you can create systems. The one thing that I've learned about systems over time, though, is they don't replace the work. So a lot of people look for a shortcut or a magic pill, and they'll chase after different software or different systems in that sense. That I've seen is kind of leads to failure. You really need to understand why you need systems and be able to do them before implementing some of these kind of shortcuts, so to say, or better ways to do things. But we, what we do with our team is we create powerful SOPs regularly. We're always updating them. Most of our documents are living documents. So SOPs, just standard operating procedures. And then we do implement, so SOPs would be kind of like the flow of how all of it works. And then we have various tools that we use, CRMs and different software and things like that, just to kind of help with a lot of that. And then building teams around you. So we have a sales team, we have a support team, we have our technology team, we have our marketing team, and then, having them all work together cohesively. So systems and processes as you grow become one of the definitely most important parts of the business, but just don't get there too fast.
Huge. And I love that you said you have to do the work, because there is no magic pill. There's no Ozempic into this real estate thing. So you've got to do the work as well. So thank you for saying that. All right, to wrap this up, and this has been amazing. The final S in badass is for success. What does success mean to Stephen Nagy?
I thought it was Stephen, but okay, success. Success is what we've been talking about. I mean, if I can continue waking up every day, loving what I do in life, that's success to me. I mean, I love to travel. My son's 8 years old now and growing like crazy. And so, spending more and more time with him, which it's already a big part of my life, but being able to spend more time with him, with my wife, travel, go on trips, and just experience it all. I mean, that's success to me. I don't need to have 100 homes around the country and Ferraris and things like that. To me, success is more just being able to enjoy the time that we have together here and enjoy it with the right people. I don't have hundreds of friends. I have a lot of business partners and associates, but my close friends are small, and I'm happy that way. And so everybody's different. And so that's success to me. It's just being able to wake up and love it every single day.
Well, I have loved this interview and enjoyed it thoroughly. And this is like the 4th or 5th time I've heard you go through this, and things are starting to click. So I do appreciate it. Thank you so much for being here. And one more time, what's the best way for people to find you?
Yeah, just NagyLeadership.com on the Facebook. You can go to my business partner's YouTube page. Is one of the most valuable financial resource pages, YouTube stations out there right now. It's at the Chris Naugle. So check that out. It's on NagyLeadership.com too, though, but at the Chris Naugle, and check it out and just give us a shout. Shoot me an email, send me a text. Let's talk. We love it.
Stephen, you are awesome. Thank you so much for being here, and happy birthday on the day that this comes out. So thank you so much for being here. I appreciate it.
What a great birthday present too, by the way, being able to share a lot of this stuff with your listeners and prior right now talking with you. It's always great to see you, Jen, and have a conversation. And thank you for everything you do. I mean, you spread this stuff just because I know you love to do it and chat with people and talk with interesting people. It's one of the cool things about having a podcast like that. And then you can share that with the world. So keep up the hard work. Love it.
Thank you so much. And that is all. Thank you for listening. And we'll catch you on the next episode. Now go out there and share your badassery. And don't forget, make it a great day. Take care. Bye-bye. Whoop, whoop.
Thank you for listening to RAIN, the Real Estate Investor Growth Network. Be sure to subscribe on your favorite podcasting platform so you never miss an episode. If you need more badassery, you can follow Jen Josie by visiting therealjenjosie.com or become a member of RAIN by registering on rainmastermind.com.